Hey friends, hope you all are doing well and taking great care of yourselves. In this video, we are going to discuss the amendments made by Finance Act 2023 relating to assessment of charitable trust. Amount received with a specific direction that it shall form part of the corpus of the trust is exempt from tax. Now, Finance Act 2021 provided that it shall be exempt if the amount so received is invested in a mode specified, one of the modes specified in section 11 subsection 5. Finance Act 2021 further provided that if an amount is applied out of that corpus towards the object of the trust, it will not be counted for the purpose of calculating that limit of 85%. However, in the year in which when the corpus is replenished back, it will be treated as if it isn't, it will be treated as it is an application. Now, this may result into a double benefit to an assessee in a way that, let's take an example that somewhere in financial year 18-19, I have got a corpus. Out of the corpus, I have withdrew an amount and applied for the objects of the trust and claimed the same as an application. Now, in the year 22-23, after the amendment which has been made by Finance Act 2021, I replenished the amount back to the corpus and I once again claimed this amount as an application. So obviously it would be a double benefit to an assessee. In order to curb that situation, Section 11 was amended to provide that the replenishment to the corpus will not be treated as an application if the amount out of the corpus is applied before 1/4/2021. So of course it is a welcome amendment. This is the same is the case so far as borrowing is concerned. Now Finance Act 2021 did not provide that within how much time this amount is required to be applied for the purpose of the, within how much time the corpus is required to be replenished. So could it be 5 years, 10 years, 15 years? I have applied the money, withdrew the money from the corpus, applied for the objects of the trust. Now after 15 years I replenish, would that be okay? So there was no upper limit. Now Finance Act 2023 made an amendment and said that the replenishment has to be within 5 years from the end of the relevant financial year in which the amount was withdrawn and applied for the purpose of the object of the trust. Same is the amendment which has been made so far as borrowing is concerned. Now, this can become a problem. Let's take an example. The assessee trust has borrowed a sum of rupees 1 crore. That amount, let's take it 2 crore rupee have been borrowed. The assessee trust has borrowed a sum of rupees 2 crore. Now, this amount is applied for the construction of the building. The assessee has not claimed this as an application because the building has been constructed out of the borrowed funds. Let's assume that the borrowing is after 1/4/2021. Now, the assessee is supposed to repay 25 lakhs each year plus interest on actual basis. That is the repayment schedule. 25 lakhs plus interest on actual basis. So for first 5 years, the assessee trust would have repaid 1 crore 25 lakhs of rupees, which would very well be treated as an application because you have repaid the money within a period of 5 years from the end of the financial year in which the money was borrowed and applied for the purpose of the construction of the building. So within 5 years you are doing it up to 1 crore 25 lakhs, there is absolutely no problems. Now in the 6th year, when the trust is repaying 25 lakhs, this 25 lakhs being repayment after 5 years will not be allowed as an application. Now assume that the trust's income in the 6th year is 1 crore rupees. Now as per the law, 85% is required to be applied for the object of the trust, 15% can be kept apart for the set apart for the future usage. So out of 1 crore 15 lakhs I have set apart. Now I need to apply 85 lakhs of rupees for the object of the trust. Now I repaid 25 lakhs of rupees as a loan. Now look at the situation. This 25 lakhs which I have repaid will not be treated as an application, which has actually gone out of my pocket. So now technically out of the 1 crore income, I have in my pocket only 75 lakhs of rupees, and out of the 75 lakhs of rupees, I am supposed to apply 85 lakhs of rupees minimum. I am supposed to apply 85 lakhs of rupees minimum so that I am not exposed to taxable, I am not exposed to tax liability. Now let us take an example. Of course, because I have 75 lakhs of rupees out of the current year's income, I cannot spend more than what I have, because now they say that the application is one which is actually spent out, which is actually given out of the pocket. Now I have not given out of my pocket more than, I cannot give out of my pocket more than 75 lakhs of rupees. So I have given 75 lakhs of rupees, I have spent every entire amount, but then I am falling short by 10 lakhs of rupees. So for on this 10 lakhs of rupees, I may be supposed to a tax treatment, I may be supposed to a tax liability on this 10 lakhs of rupees. So minded, this leads towards a situation that I have to pay taxes because I don't have money. It is not a case that I have a money and I'm not supposed to pay taxes. It is a case that I don't have money and that's why I am supposed to pay taxes on this. So this is the irony that might be created on account of this particular amendment. So some relaxations are expected. If there comes some relaxation, it will be highly appreciated. Now going towards the another set of, of course, before we go to the other set of amendment, let me quickly take you to the PowerPoint which I have prepared. Yes, so the same amendment, as I mentioned, this is effective from AY 23-24. Loan or borrowing or application out of the corpus fund before 1/4/2021 will not be treated as an application of income when such amount is deposited back or invested into corpus, or when loan or borrowing are repaid. Let me, as I mentioned, I'm sorry, the screen was not visible to you. Now probably it will be better visible. Yes. Loan or borrowing or application out of the corpus before 1/4/2021 will not be treated as application of income when such amount is deposited back or invested into the corpus, or when loan or borrowing are repaid. If the trust or institution deposits back or invests the corpus or repays them within 5 years from the end of the application of income or funds from the corpus or loan, the same shall be considered as application. But then this is subject to certain conditions. The conditions are in front of you. I'm not reading those conditions. You can pause the video. The conditions are very simple. One can read that. Now this leads towards the second amendment. Now let us take an example of a trust which is already in existence and which is already carrying out charitable activities. So as per the law available as on date, or the law applicable as on date, I'm sorry, you have to make, if you are a trust, if you are carrying out charitable activities but then you are not registered with the income tax department, or let's say you are registered but then the registration has been lost, then the situation is, boss, first of all you need to make an application for a provisional registration, and then within 6 months of the commencement of the activities you have to make an application for the fresh registration. Now let us take an example. So example that there is a trust which is never registered under section 12AA. In that particular case, the trust would have to make an application for the purpose of provisional registration. Immediately within 6 months, another application is required to be made for the purpose of obtaining a permanent registration, or registration for the purpose of for the period of 5 years. So in the same year, 2 registrations are required to be made. So of course this leads towards certain kind of administrative inconveniences, and to overcome that situation, an amendment has been made with effect from 1st of October 2023, I'm sorry, which says that provisional application for registration should be made before the commencement of the activities. Now so far as you are not commenced any activity, there is no problem. You can make an application for provisional application before the commencement of the activities. That is okay. We are okay with this. You can make an application. So far, so good. Now, in case when the activities are already commenced, now look at this second paragraph. This is very important one. If the activity is already commenced, trust shall make an application for regular registration, provided, now these conditions are very important. If already commenced, trust shall make an application for regular registration, provided where activities of the trust or institution have commenced and no income of or part thereof of the said trust or institution has been excluded from the total income on account of applicability of clause 4, clause 5, clause 6, clause 6a, sorry, subclause 4, subclause 5, subclause 6, subclause 6a of clause 23c of section 10 or section 11 or section 12 for any previous year ending on or before date of such application at any time after the commencement of such activities. मतलब अगर आपकी एक्टिविटी ऑलरेडी कमेंस हो चुकी है तब जो है आप रेगुलर रजिस्ट्रेशन के लिए डायरेक्ट अप्लाई कर सकते हैं, लेकिन एक कंडीशन अटैच है और वो कंडीशन ये कंडीशन है कि कभी भी आपका कोई भी इनकम या कोई भी पार्ट ऑफ द इनकम हैज नॉट बीन एक्सक्लूडेड फ्रॉम द टोटल इनकम बाय वर्च्यू ऑफ द स्पेसिफाइड सब क्लॉजेस ऑफ सेक्शन 10 clause 23C और सेक्शन 11 और सेक्शन 12. Now take a situation that you are a trust granted a provisional registration but forgot to make an application for the re-registration for the regular registration. Now in that case your income has already been exempted in the past, so this benefit will not be available to you. Take a case that you were registered trust, you made an application for a regular registration which was valid for 5 years. 5 years have been completed and you have not made an application within the stipulated timelines once again for another registration for a period of 5 years, then once again in that case you cannot take the advantage of this particular section. So it would be applicable. So once again, to that extent, of course, the amendment is a positive, but then the positive amendment restricts this kind of trusts which have failed in getting re-registration done within the stipulated timelines. So once again, a welcome amendment, but then these amendments have certain restrictions which are required to be kept in mind. Once again, this amendment is applicable with effect from 1st of October 2023. Now, one more amendment which is effective from AY 24-25. The law says that the assessee are required to obtain new trust are required to obtain a provisional registration, and assessee which are already registered are required to obtain a re-registration, and that would be for every 5 years. Now, in order to continue availing that particular benefit or the exemption, the process has been automated, which resulted into grant of approvals even in a situation where the forms furnished were defective. So once again, that was never an intention, and that is the reason they amended the definition specified of the definition of the term specified violation and provided that Finance Act 23 has widened the scope of the term specified violation to include application made which is not complete or contains false or incorrect information to attract cancellation of registration. Now they say that the specific violation now include an incomplete information or false or incorrect information. तो ये जो ऑटोमेटेड प्रोसेस के कारण आपको रजिस्ट्रेशन मिल गया था और अब ये पता चलेगा कि आपने जो फॉर्म भरा था वो गलत था या आपने कोई रॉन्ग इन्फॉर्मेशन दिया था या इनकम्प्लीट इन्फॉर्मेशन दिया था, पर क्योंकि ये ऑटोमेटेड सिस्टम था तो अपने आप उसने अपना काम कर लिया था और आपको रजिस्ट्रेशन मिल गया था, तो नाउ इट विल रिजल्ट इनटू द कैंसलेशन ऑफ द रजिस्ट्रेशन, एंड दिस कैंसलेशन ऑफ द रजिस्ट्रेशन विल हैव अ डिजास्ट्रस इम्पैक्ट दैट वी वुड सी इन द नेक्स्ट अमेंडमेंट. First important amendment, then this other amendment category will deal with the last one first, which is an exit tax. Now, section 115 TD deals with that. Now, what does section 115 TD provides? They say that when a charitable trust ceases to be a charitable trust, when a charitable trust gets merged with a non-charitable trust, in that particular situations, or when there's a dissolution of a charitable trust, in that particular case, there will be a tax, and the tax will be at the maximum marginal rate. Now, the provisions are amended by Finance Act 2023, and they provide that even in a case where you have made an application for a provisional registration and then you failed to take a regular registration in a stipulated time, 115 TD would be applicable. Or let's say you made an application for a regular registration for a period of 5 years and the stipulated time is complete or stipulated time is over for making another application for the next 5 years. Even in those particular cases, this 115 TD would be applicable and it would be taxed at the maximum marginal rate. Let's say, what do they say? Under the existing provision, an exit tax is levied on accreted income of at the maximum marginal rate on dissolution or conversion into non-charitable form or on merger with non-charitable entity. Exit tax is applicable even in case where the application for exemption, its approval is not made in accordance with the provisions. Exit tax is to be paid within 14 days. Till now, it is understood that any trust which loses its exemption has to pay the tax. Now, then there is an amendment. From now onwards, this will be denied. This will be denied as conversion, and additionally, the trust has to pay exit tax on the excess of market value of the assets over the liabilities. मतलब अगर आपने रजिस्ट्रेशन लिया है प्रोविजनल और रेगुलर लेना भूल गए, या तो स्टिपुलेटेड टाइम ने नहीं लिया इसलिए आपका एप्लीकेशन हो गया कैंसिल, या आपने रेगुलर लिया था लेकिन 5 साल के अंदर अंदर आप री रजिस्टर करवाना भूल गए, तो इन दैट पर्टिकुलर केस the 115 TD tax would be applicable, and of course this is a disastrous amendment. Other small amendments which are important, that is once again inter-trust donation. Make sure that all these amendments which you can see on the sites are applicable from AY 23-24. They all are retrospective amendment. Inter-trust donation. I am a charitable organization. I have received a particular amount as donation. So far as it is a corpus donation, certainly not taxable, subject to complying with the other conditions as mentioned. I have received a voluntary donation. 15% is what I can accumulate. 85% I am supposed to apply for the objects of the trust. If out of the amount which I have received as voluntary contribution, which is not a corpus donation, if I give certain amount as donation to the other trust, which is not a corpus donation, in that particular case, I used to claim this amount as an application. Now they say that there is an amendment. If I am giving 100 rupee as a donation, only 85 rupee would be treated as an application. The balance 15 will not be treated as an application. So this amendment is made just to overcome a situation where I have got, let's say, 1000 rupee as my voluntary contribution, not forming part of the corpus. Out of it, let's say I pay 100 rupee as a donation to another trust, claim 100 rupee as an application. That trust once again pays 80 once again I came 15 rupees as an application out of that money, and let's say 85 rupees is what I have applied. So I give, as a matter of fact, out of 1000 rupees, sorry, my example was wrong. I reframed the example. I have got 1000 rupees as a voluntary contribution. Out of 1000 rupee voluntary contribution which I have received, 15% is what I can accumulate. So I have taken 15%. So 150 rupee is my application, is my accumulation which I am permitted to do. Rest 850 I have given as a donation to an other trust, assuming that it is not a donation as a corpus donation and other conditions are being met. So I will treat that entire 1000 rupees as my application. Now, I mean, 850 would be my application. The entire 850 what I have given would be my application, not 1850 what I have given, that would be my application, and 150 would not be taxed. The other trust will have now 850 as the income. Out of 850, 15% amount, let's assume for a time being to be once again 150 rupee. They would say this is my application. Remaining 700. So 150 I'm taking as a rough estimation, rough calculation. The exit amount may be different. Now 700 rupee they would give to other trust, and they would say that the 700 rupees an application. So on and so forth the money go, and then not a single penny is applied for the object of the trust. And finally the situation would be that the entire amount would be treated as an application. So that is once again never an intention. So they now said that, sir, if you have got 1000 rupee as donation, 1000 rupee as voluntary contribution that I have received, let us assume that, and I plan to give out of the 1000 rupee, let us take an example, 500 rupee as contribution. Then I cannot say that I have given 500 rupee as contribution, or I have received 1000 rupee as my income. I'm giving 1000 rupees, so I would say 150 rupees what I have accumulated, and 850 I am giving you as the donation. So this 850 will not be 85%. 850 would now be treated as 100% itself basically. So technically speaking, what I have given out of that given amount, 85% will be allowed as application. So let's say if I have given 500 rupees, then 85% of 500 would be an application. If I have given 850, then 85% of 850 would be given an application. So now it won't be a case that I keep on giving that money and I keep on accumulating 15%. that will not be a situation. So mind it, quickly revising this particular illustration. Before amendment, the situation was I have received 1000 rupee as my voluntary contribution other than a corpus one. I can say 150 being 15% I can accumulate. I have accumulated 150 rupees. So far so good. Now 850 I have given as donation. I give 850 as donation to another trust which is not a corpus donation and the other conditions are being met. So I said 850 is a donation. It is an application. It is allowed as an application. No problem. Other trust said that my income is 850. Let us assume that 15% is for ease of understanding to be 130 rupees. So he said that 130 is my application. 130 is what I set apart. 720 I give it to another trust. So nobody is applying for the object of the trust. Technically, everybody is circulating the same amount. And finally, everybody is getting tax benefit, which is not the intention. So the law said that now that Mr. Jignesh, if you are giving 850 rupees as donation, this 850 will not be treated as an application. Only 85% of the 850 will be treated as an application. Only 85% of the 850 will be treated as an application. So if I say that now out of 1000 rupees my income, 150 I have set apart, which I am entitled to do, so far so good, Mr. Jignesh, you can do, we have no problem to that. Now 850 is left out. You have given 850 donations, sir. 850 ke 85% ही मिलेगा. Let us assume for ease of understanding that 85% of 850 turned out to be 720. So 720 would be treated as an application. 130 will not be treated as an application. So I'll have to apply 130 again for the object of the trust, or I have to pay tax on this particular amount of 130. That is what the amendment which has been made. That's an inter-trust donation. That is the amendment. Due date of filing form number 9A and 10 has been preponed. Now it has to be filed 2 months before, prior to the date of filing the return. So the return in case of the trust is to be filed by 31st of October, 2 months before that. So by 31st of August, this form number 9A and form number 10 are required to be filed. Another amendment is with respect to an updated amendment. They said that you can claim the benefit under section 130. You can claim the benefit of section 11 provided, or section 1023C or section 11 provided the return of income has been filed within the due date which is given under section 139(1). Meaning thereby, if at all you missed filing return under section 139(1), and then you are claiming that I am filing an updated return which I can file within a period of 2 years from the end of the assessment year and I can get the benefit. Now boss, this cannot be a possibility. This is never an intention. So you have to file your return by 31st of October. Then and only then you would be in a position to claim the benefit of section 11 and section 12. So these are the various amendments which have been made by Finance Act 2023 relating to the assessment of the trust. Friends, please note that this amendments, or then the discussion on this particular amendments, is only an academic discussion, and all the views which I have given, they are my personal views. Please consult your chartered accountant, lawyers, tax consultant before taking a final decision. I hope these videos are useful to you. Please subscribe to the channel for getting regular updates. And if you have any suggestions, queries, please feel free to share. I would try to solve them to the best of my capacities. Thank you very much. Wishing you all a great time ahead.